In this video, we talk about the newly proposed stress test increase here in Canada and what exactly that means. Stay tuned. Hey everybody, I'm Rob Campbell, mortgage broker here in Canada, and if you're new to this channel, please consider liking and subscribing. If you click that little notification bell, you'll get notified every time we upload new content to the channel, and give us a thumbs up. It helps us with our YouTube algorithm goodness and gets this video out and all of our other videos out to other people who might find them useful. So recently, OSFI announced that they were proposing changes to the Minister of Finance for the mortgage qualifying stress test rate here in Canada. And this video, we're going to be talking about what exactly that means as it pertains to uninsured mortgages. And again, there's some misconceptions about exactly what an uninsured mortgage is. And I'm going to do my best to try to explain what that stress test increase means and what exactly are uninsured mortgages. So we're going to start there. So what exactly is an uninsured mortgage? Well, here in Canada, an uninsured mortgage could be one or all of these following things. A mortgage is considered uninsured if the property value being purchased is over $1 million. So again, the purchase price has to be over $1 million for that mortgage to be considered uninsured. Why is that? Well, CMHC, Sagen, and Canada Guarantee, Sagen being formerly known as Genworth here in Canada, will not insure mortgages over $1 million in value. That's mandated by the government. So any purchases on properties over $1 million has to have a minimum down payment of 20% and cannot be insured with the government or CMHC, Sagen, and Canada Guarantee. A mortgage on a rental property is also considered uninsurable or uninsured. That is because you cannot get a CMHC policy number on an investment property here in Canada. So all properties in Canada that are bought for investment purposes only are considered uninsured mortgages, and they would require, again, 20% or more down. If you're looking for a mortgage with over 25-year amortization, that would also be considered an uninsured mortgage. CMHC guidelines say that if the property is under $1 million value and it's owner occupied, you cannot have an amortization more than 25 years. So again, if you're looking for an amortization over 25 years, so 26, 25 and a day, up to 30 years, or some lenders even going as high as 35 or maybe even 40-year amortization here in Canada, cannot be insured. So therefore, it's considered an uninsured mortgage. Also considered an uninsured mortgage is a refinance mortgage. So if you currently have a mortgage on a property that maybe you bought with less than 20% down within the last 5 years, and you're looking to refinance that mortgage to get money out of that house, and that mortgage on an equity takeout basis, that would be considered an uninsured mortgage as well. Again, refinances are not insurable in Canada, so that would be considered an uninsured mortgage. So the real big takeaways here are if the house is worth more than $1 million, or you want an amortization higher than 25 years, or it's a rental property, these are all considered uninsurable mortgages or uninsured mortgages. So OSFI has come out and said that they want to increase, or asking banks and financial institutions to seriously consider increasing the mortgage qualifying rate from the current 4.79 to 5.25. So what does this request mean to buyers like you? Well, currently the stress test on uninsured mortgages is either 2% higher than the contract rate or 4.79%. So what does the 2% higher than the contract rate mean? If you're getting a mortgage for 2% fixed on a 5-year term, you technically would add 200 basis points or 2% to that rate, being 4%. That is still lower than the 4.79 of current rules, so you would have to use the higher of the two. You'd have to use the 4.79% in that instance. If you were getting a mortgage, an uninsured mortgage, but your mortgage rate with your financial institution or lender was, let's say, 3.25% for the 5-year term, you would actually have to add 2% to that and come in higher under current guidelines at 5.25. So what OSFI is requesting is that they take that benchmark rate, that 4.79%, and increase it to 5.25. So that is what they are going to be requesting of the Department of Finance and financial institutions here in Canada. So again, to recap, the current stress test rate is either 2% higher than contract rate or 4.79%. OSFI is recommending that they increase that to 2% higher than contract rate or 5.25%, whichever is higher. Now, this could affect homeowners that currently have a mortgage that they want to port to another property, especially if they are looking to go over $1 million. If you currently bought your home and the house at the time of purchase was less than $1 million, maybe you got CMHC financing on that property or the other two insurers, Canada Guarantee and Sagen, but you are wanting to move your mortgage to the next property. If that property is over $1 million, you might not be able to port your current CMHC policy with you because it doesn't technically meet those guidelines. And then such, you would have to qualify under the stress test rate or the newer rates that OSFI is proposing if they were actually put into play. Now, the next question is, when are these guidelines going to be taking effect? Well, OSFI has asked for these reviews to take place by May the 24th of 2021, and we could see implementation as soon as June the 1st, 2021. I wouldn't be surprised if we actually saw that implemented by June because of the way that the housing market is here in Canada. The housing market, unless you've been living under a rock, you know that the housing market in Canada has taken off like a rocket. And the real easy way to calm this housing market, are to implement really quick and easy rule changes, such as the qualifying rate, and that might put a little bit of damper on the fire here in Canada, but some are arguing that that's not going to actually do much at all. These rule changes to uninsured mortgages and qualifying for uninsured mortgages would probably mean a 4 to 5% decrease in your affordability moving forward. So not a huge difference. Again, with seeing the transfer of wealth from generations helping with down payments in this crazy market, the 4 to 5% decrease in buying power is probably not going to be a big enough speed bump in the road to calm the housing market. So the next question is, are these rule changes going to be implemented on high ratio mortgages or insured mortgages? Well, that hasn't been discussed as of yet. There was a note saying that in some of the press releases that OSFI and the Department of Finance would probably be talking to one another. And of course, the finance minister would have to roll out any rule changes regarding CMHC and high ratio mortgages here in Canada. So those less than 20% down mortgages, still no news on whether those are going to be changed on the benchmark rate or the mortgage qualifying rate. But this broker's guess is it's only a matter of time before they change those rules as well, because it's just easy to make a sweeping change across all mortgages in Canada with a rule change or a policy change. So probably going to see some rule changes when it comes to high ratio borrowing in Canada. So how does this trickle down to you as a homeowner if you have an uninsured mortgage right now, or you're looking to buy a home and have an uninsured mortgage as well? Well, as we already covered, you're probably only looking at approximately a 4 to 5% decrease in affordability when qualifying moving forward. Something to note though, again, I just want to reiterate, as home values start to increase here in Canada over the last 2 to 3 years, rapidly starting to increase, some cities seeing 20, 30, even 40% year over year increases in values, you really got to be aware of your options on that $1 million plus category. That seems crazy to a lot of us, including me. But once you get into that $1 million plus category, you are starting to look at qualifying for a mortgage with the uninsured guidelines that are probably coming down the pipe. Again, no real crazy rule changes here just yet, but just wanted to explain what uninsured mortgages are and how that rolls out for the average Canadian home buyer with these rule changes proposed by OSFI this past month. Again, if you found this information useful, please consider subscribing to our channel and clicking that little notification bell. You'll get notified whenever we create new content. And again, consider giving us a like, a thumbs up on this video. It'll help us with our algorithm with YouTube and get this video out to more people who may find it interesting. Again, I'm Rob Campbell. I'm a mortgage broker here in Canada. I hope you found this well. Stay safe, take care of yourself, and we'll see you in the next video. Bye-bye.